So we will be making some forward-looking statements. I'd like to start with this slide. We developed a slide at the Denver Gold Show in September. The numbers have moved around a bit. Some things have changed. But what I like about it is it does allow us to really highlight, when you're a shareholder of Silvercorp, what you're getting exposure to in terms of the assets in the value stack. First and the easiest is the green box at the top, the cash, $210 million in cash as of December. No debt. The company hasn't done a financing since 2010. And you see we do pay a dividend, and over the life of the company have returned to shareholders over $175 million through dividends and share buybacks. But the real focus for this cash is to be employed as fuel for growth. And what we're looking for around the world are our next project, basically, something that can deliver a meaningful contribution to our cash flow that we're getting from our existing operations. Working our way down the stack, as of December, we have an investment portfolio in other public mining equities. And December was not a great time to value mining stocks. You can see that value was $122 million. Pleased to report that our largest position, our 28% stake in New Pacific, is actually worth now $128 million. The overall, the numbers are up. Importantly, the investment in New Pacific, we've made more than 3 times our money. And from what you just heard from Andrew, we're very excited about the catalyst for additional growth and value creation going forward. So working our way down, last but not least, in the red box is our mining assets. And when you take a step back and look at our market cap, $699 million recently. If you back out that cash and back out the value in that portfolio, it really means that the market is paying on an implied basis something less than $370 million for our mining assets. Assets which consensus NAV from the street is $610 million. Assets which delivered on a trailing 4-quarter basis operating cash flow of $91 million. And in our quarter ended December, our all-in sustaining cost to produce an ounce of silver was $9.28 net of our byproduct credits. We've got a program in place to optimize these mines and also increase the capacity so that we can see some growth in production. Looking to get our silver production up from 6.6 million ounces in this current year that just ended in March to roughly 8 million ounces by fiscal 2026. And of course, we wouldn't be in the position we are with that production history and that plan going forward if we didn't have a successful 17-year track record of ESG and good government relations. So where are we? Well, we're operating the Ying Mining District, which is in fact 7 mines feeding into 2 mills in Henan Province in China. Our smaller mine, the GC mine, began production in 2014, and both mines produce basically the same product, which is a lead concentrate containing the silver and a zinc concentrate. Those products are sold domestically to smelters within China on very favorable terms, and that's one of the advantages of operating in China. The other side of that is from a supply standpoint, we're very close to all the suppliers that we need to access for reagents, equipment, etc., to operate our mines. And from a workforce standpoint, we've got a dedicated and very capable workforce. All told, our mines have delivered just under 90 million ounces of silver since production began in April of 2006, and over 1 billion pounds of lead and zinc. The Ying Mine alone has produced profits in excess of $500 million. And as you'll see in a later slide, we have a good mine life ahead of us based on our reserve and resource inventory. Based on reserves, it's in excess of 15-year mine life. So really, when it comes down to operations and making money, it's related to asset quality. And that low cost of production that I mentioned earlier is a main contributor to our high EBITDA margin, which for the 4 quarters ended December was 41%. You can see how that compares to our peer group average at 21%. And then just looking at other sectors, other industries, 30% for non-energy materials and 12% for industrial. So, we're doing well making money in the mining sector and actually just on an absolute basis for that matter. Moving your way down the income statement and looking at return on equity for that same period, the 4 quarters ended December, our return on equity was 8.3%. Compares to -1 for our peer group. And just to add that when you look at that return on equity calculation, if you backed out the cash and the investment portfolio that I showed you on that first slide, the actual return on equity here would be much greater. It's that asset quality and those margins is what has allowed us to deliver very consistent profitability. You can see on a quarterly basis, adjusted net income consistently positive. And similarly, on a free cash flow basis, we're delivering solid free cash flow. The one element of seasonality that you can see there is in calendar Q1, or our fiscal fourth quarter, is when there's Chinese New Year. So everything in the country pretty much shuts down for 2 weeks, our operations included. So that's why it's our softest quarter in the year. Now, despite that solid performance, you can see from a valuation standpoint, we trade at a discount to our peer group and the averages on an EV to EBITDA basis, price to adjusted earnings, and price to cash flow. And again, other than the cash adjustment in the enterprise value, none of these numbers are adjusted for the fact that we have assets in our company that aren't currently generating earnings. Now, I talked a bit about Ying, and we see opportunities for some growth. Most people won't believe it, but we drilled 1 million meters of core in 3 calendar years at Ying. At one point, we had 80 rigs operating across our 7 mines. Now, some of this drilling has been, the historic track record as related to adding to that reserve and resource base. But we were also following up on a new discovery where we identified a gold and copper-rich zone within the footprint of our existing mines. But you can see that what we've been able to do with that is that drilling is add to our reserve base and replace our depletion through mining. We've got, again, for this upcoming fiscal year, a fairly aggressive drill campaign. The mines, which are all in the 4 mining permits that you can see at the bottom of the slide here, we're undergoing a bit of a mine optimization program, looking at some adjustments, bringing on some ore sorting to upgrade some of the material that's coming out of the mines. And this is preparing for this growth program we have in place to expand, build a 3rd tailings storage facility, and also a 3rd mill at the Ying mills, which you can see are the red box just above the mining permits. And we're able to complete those construction programs at very attractive costs because of our location in China. Part of the growth that we can see in the district will come from some other projects, satellite opportunities, one of which is the Kuanping project. We bought that in the fall of 2021. Very nominal cost, about $13 million. This past fourth quarter of 2022, we got the mining permit. We're waiting for some other ancillary permits, and then we'd like to come back and explain to the market how we're going to build another mine there, with the initial focus being to employ a hub and spoke operation and truck the early ore down to the Ying facilities. Now, it's that drilling which is what's delivered the great performance in the upper part of the slide. You can see in that red box, that's our proven and probable reserves in terms of millions of silver ounces. Last few years have been pretty consistent at about 114, 115, despite our depletion through mining. Add another approximate 100 million in M&I, not included in that proven probable, and then another 125 million ounces roughly of silver in our inferred category, which we believe we can continue to add with based on the district that we're operating in Ying. And we've been able to do that despite growing our production. You can see very consistent and stable between 6 and 6.5 million ounces. There's the 6.6 anticipated for this fiscal year that just ended, and looking to grow that to approximately 7 million ounces of silver for fiscal 2024. Now, Andrew just talked about New Pacific, so I won't get into a lot of the details, but maybe more to speak to the strategy, where we've seen opportunities around the world where there's interesting deposits or projects that we can get exposure to on behalf of our shareholders. We've made investments, but incubation is certainly something different where we feel we can have more influence and have a bigger stake. We're very excited by the advancement of not just silver sand, but Karangas and silver strike that Andrew mentioned, and we can see some catalysts this year, which as a largest shareholder are certainly very positive. So speaking of catalysts, as I mentioned, we're looking at an uptick in production for our current fiscal year, 2024, which we just started beginning of April. Additional drilling at our mines, no doubt we'll find more high-grade silver, lead, and zinc, but also make more discoveries, open up new areas. We're undergoing those mine optimization programs that I mentioned to really enhance the production profile. Also looking at bringing on Kuanping as another source of ore for the combined operation. And that will tie into the completion of the new tailings storage facility at Ying and a third mill, which will bring our capacity up to about 5,000 tons per day in terms of milling capacity. I didn't really mention it at the outset. We have another mine in the stable. It's on care and maintenance. That's BYP. It was largely a lead zinc mine that we took out of production in 2014, but we've identified a gold resource there, and we're going through a process to apply to get a permit to reopen that as a gold mine. Really, the market gives us no value for it. When we get that permit, it'll be a catalyst for making a decision as to whether we go forward or whether we monetize that in some fashion. I've touched on New Pacific, and obviously we're keen to see the project advancements, both in terms of the technical numbers, but also moving towards the permitting of silver sand. And last but not least, our group has a very aggressive program looking for acquisition targets around the world. Very generally looking at things mainly in Africa, Latin America, and Australasia, open to gold, silver, maybe gold, copper, if there's some byproducts for those precious metals. And really it's looking at the kind of assets that we've built in our operations in China, which is something that we can get in with a predictable timetable to construct and bring into operation a new mining operation, and again, grow that existing free cash flow base for our shareholders. Now, I'll spend a few minutes just to speak to the ESG factors. Obviously, we've been very active, through all these levels through the years. From an environmental standpoint, you can see some of those numbers. Focus on water is obviously important in mining, and I'll touch on that again. Also, looking at ways we can be innovative with our waste products, and again, I have another slide to talk about that. From a social standpoint, we make investments in the community in terms of infrastructure, education, and really when you're operating in the kind of facilities that we do, training and safety for our employees is paramount. Last but not least, we've done a great job of doing the things on the ground. However, the governance idea and actually being more formal in disclosure is something that we've picked up in recent years. So we're coming up on our third year of issuing a sustainability report and really bringing our disclosure in line with our peers in the industry. Now, in terms of specific projects, our mines actually qualify under a program within China, both at the provincial level and at the federal level, to be called green mines. So they're listed in a registry, basically website that you can find to see that lists all the mines that have met this independent audited criteria. But on top of that, at our GC mine, for example, we're employing dry stacking of our tailings, which is obviously the best method for tailings storage. But on top of that, we've also put a backfill facility in. So whatever we can, we're putting back underground in paste backfill to fill the voids left after mining. Moving down to the bottom at Ying, you see the left-hand side. SGX is one of the largest and most prolific mines at Ying. Just a couple of years ago, completed a state-of-the-art water treatment facility. This has allowed for increased recycling of water, also dust suppression, also for the greening of the mine site. And in fact, that water is usable for agriculture that takes place in the area. The bottom right-hand image, this is a aggregate plant, and so this is something that touches on both the environment and the social side of things, because what we've done is we've put the capital into building a plant that will crush up to 1 million tons a year of waste rock. And we're doing this in a collaborative effort with some community groups. So what we do is we eliminate a waste product from our facilities, but it gets turned into aggregates that can get sold in the local construction market. So there's an economic value that's being created for the community. And the other side of it is they need an aggregate, and rather than opening up a new mine to produce that rock, we're actually able to deliver it from waste material from our facility. Just a quick snapshot in terms of the capital market side. You can see on the left-hand side of the slide here our top 10 institutional shareholders. Clearly representation from some of the index funds and some of the quant funds, but also some traditional long-only mining investors in both North America and Europe. On the right-hand side, you can see our coverage list, 7 houses, 6 in Canada and 1 in the US. And from an ownership standpoint, we're approximately 2/3 retail ownership, and then the other third would be institution and insiders combined. And with that, I'll wrap it up, and I do have a few minutes if there are any questions.
Any questions from the audience? Just a quick one for me, Lon, in terms of having operations in China. Obviously, you're looking at building the portfolio within China as well. How is the permitting process in China, and is it kind of comparable to the rest of the world in terms of mining codes and certain aspects?
I mean, there's definitely a lot of codes and a lot of compliance related. I think the big difference is that when you apply for a mining permit, you deliver to the government a resource statement that's calculated using their methodologies, as well as a mining plan that shows that you can mine those resources that you've identified on both an economic as well as environmentally and safety standpoint prudent way. And then with that, you get granted a mining permit for a period of years. And then subsequent to that, you just renew those permits, which we've had no issue doing that.
So fairly straightforward.
Fairly straightforward. I think there's a healthy level of bureaucracy in China, but at the same time, the system works, and there's an understanding that it's important to have economic growth and economic drivers. And so, in the communities where we are, we're a welcome operator because we do so safely. We generate economic value and obviously tax revenue, both at the local and the federal level. So there's, I'd say, a healthy coexistence in terms of allowing and enabling, but there's, again, a high degree of scrutiny in terms of making sure you're following the rules and doing things properly.
Perfect. Thank you so much, Lon.
All right, thank you.